Welcome to the fourth module of our IFRS number 6 e-learning course. In this module, we are going to focus on crucial topic related to the impairment testing for the exploration and evaluation assets. Let's start by understanding the indicators that suggest an exploration and evaluation assets might be impaired. So there are some impairment indicators, and these impairment indicators are in alignment with IAS number 36 that we have discussed before. So number one, significant changes in the external environment. So whatever significant negative changes in the external environment might happen that will impact the future economic benefit of the mineral resource that we have explored. So in this case, there will be impairment loss related to the E&E assets. The second indicator related to the impairment is related to new information that might indicate a decrease in the recoverable amount. So in this case, this new information might be related to, for example, political, economic changes, impact of the interest rate, inflation, and impact of the oil prices related to economic changes or political changes. All of this will impact the degrees in the recoverability of the cost that we spend on the E&E assets. The third indicator here is related to the obsolescence or physical damage of the assets. And the final indicator is related to unsuccessful exploration activities. So as you see, from these unsuccessful activities, you will not be able to recover the cost that you spend on the exploration and evaluation activities. So in this case, value that you spend, the cost that you spend is being impaired. So for example, let's assume a mining company faces unexpected challenges, such as those related to adverse regulatory changes or a decline in commodity prices. These external factors may trigger impairment indicators for its E&E assets. Now, let's explore the step-by-step process for conducting impairment testing for the exploration and evaluation assets. The first step is to identify the cash-generating units. So as we defined before this term cash-generating units in IAS number 36, so we are going to group the E&E assets into the smallest identifiable group generating largely independent cash inflow. The step number 2, related to the impairment testing, is to determine the recoverable amount. So we need to compare the carrying amount of the cash generating unit with the recoverable amount. The recoverable amount here, as per also IAS number 36, is the higher of its fair value less cost to sell and its value in use. So we need to calculate firstly the fair value less cost to sell and the value in use. And the higher of these two values will be considered the recoverable amount that will be compared later with the carrying amount. Now let's move to the third step. Once we calculated the recoverable amount, we need now to compare the recoverable amount with the carrying amount. If the recoverable amount is less than the carrying amount, so the impairment exists here and we have to measure this impairment loss. Now, this impairment loss in step number 4 is the excess of the carrying amount over the recoverable amount. So let's suppose a mining company that has exploration and evaluation assets grouped by geographical regions. The impairment testing process involves assessing the recoverable amount of each region compared to the carrying amount and then calculating the impairment loss where necessary. Now let's move on to how the impairment losses are being recognized and measured under IFRS number 6. IFRS number 6 specifically requires impairment losses for exploration and evaluation assets to be recognized in the statement of the profit or loss. And here is the breakdown of the key points here. When facts and circumstances suggest that the carrying amount of an E&E asset may exceed its recoverable amount, the impairment test is performed in accordance with IAS number 36, with some modifications as outlined in IFRS number 6. So first things first, that you are searching for indicator for the impairment. Once you found an indicator for the impairment, you have to do the impairment testing to calculate the impairment loss. So this process of impairment testing is aligned with what we discussed in IAS number 36, because it has to go through 2 steps. Number 1, searching for indicator. And if there is an indicator refers to the impairment, so we have to do the impairment testing. Once we did the impairment testing and we have a loss, so in this case, we have to identify this loss and we have to recognize this loss. this loss is always recognized in the profit or loss, even if the asset is being carried at revalued amount. Now, the option to recognize the impairment losses in other comprehensive income as permitted under IAS number 36 for certain assets does not apply to the E&E assets under IFRS number 6. What does it mean? It means that there is no OCI option. It means that all impairment losses to be recognized in the statement of the profit or loss. So you might wonder, what is the rationale here behind this specific treatment under IFRS number 6? The rationale here that is the E&E assets are often highly uncertain in terms of their future economic benefits, and recognizing the impairment losses directly into profit or loss provides a more transparent and conservative approach to reflecting these potential risks. Impairment loss are measured at the difference, as we explained before, between the carrying amount and the recoverable amount. So this is how to measure the impairment loss. And for example, if an exploration and evaluation asset in a specific region is impaired, the company would recognize the impairment loss in the statement of the profit or loss. The measurement of the loss is to the extent to which the carrying amount exceed the recoverable amount. Now, let's summarize. We have covered in this module the indicators of the impairment, the testing process for the exploration and evaluation assets, and the recognition and the measurement of the impairment assets. In the next module, we are going to take a numerical example on how to calculate the impairment loss for the E&E assets. Join me in the next module.